Welcome back. Today we are going to be identifying structure in the market. I'm going to be teaching you guys how to identify breaks of structures, which are also called BOS, and what also aren't break of structures, so you guys can stop taking these false trades, and overall market structure, to be honest. You guys probably already know the basics like bullish and bearish trend, and that's beautiful. That's like one of the top things you need to know about this. But structure is very important, and let's just get into it because I don't really want to waste time. All right. So first, let's draw out. Actually, guys gotta know what a break of structure is before we get into it. So a break of structure identifies a trend shift in the current market structure and can indicate orders being filled. What the hell does that mean? All right. So I'm going to draw it out for you because I am such an artist and I know how to do so. Brush. All right. So boom, we got three types of trends in the market. We have bullish, bearish, and consolidation. Okay. So boom, we're gonna draw it out real quick instead of hopping right into the charts because I'm trying to do that. So boom, got a bullish trend where we make higher highs, lower highs, higher highs, lower highs, higher highs, lower highs, higher highs. You guys should notice. And now we have consolidation. All right, no, I'll go into bullish first. We make lower high, lower high, lower low, or high, lower low, lower high, lower low. All right, y'all get it. All right, and then consolidation, where we're kind of just chopping. We call this consolidation. You might hear me call it accumulation. It's just where market is building liquidity, so then we can sweep it out, do our liquidity sweep and come lower. But we'll get into that later when we get into the power of 3 and AMD. Okay, so boom, what identifies a break of structure though? I showed you guys bullish trend, bearish trend, and consolidation. What identifies a break of structure? I'll move over here so we have even more room to draw. So say we're going higher, we have that bullish trend. Boom, boom, higher, lower, higher. You guys get it. All right, now say we come take out this previous high. So if I drew a line here, identifying the previous high, right, and we come take that out and closed below it, that will confirm our conviction for a break of structure, and then we will continue lower in the market. So this would be our break of structure point. All right. Here. Take notes. Okay. And it's the same thing over here with bearish. So say we're in a bearish trend and we want to see a break of structure and we're not sure. So we're going to draw it out, right? We got our lower highs, lower lows, lower highs, lower lows, lower highs, lower low. Y'all get it. But as soon as we come take out that previous high, that will identify a break of structure. And now when I say take out, we want confident displacement, right? So we want a full close, a candlestick close above that high to confirm it. So then it will be confirmed as break of structure. It's pretty simple. Like, we're keeping this pretty simple. Like, I know other gurus or whatever, they make it all complicated, but it's really simple stuff. Like, trust me, I ain't that smart, bro. But that is a break of structure towards the upside. All right, so that was kind of a lot thrown at you guys. So first, let's just do a little recap. Just recap, get the thoughts flowing and all that. So why do we have a break of structure? And what do we need to have a break of structure, right? So say we're in a downtrend and we're creating lower lows and lower highs in the market, okay? All right, what do we need for us to change our structure and have a break of structure toward the other side of the market, right? We need to be going higher, right? And we need to break above this high, close above this high, and it can be on any candlestick, any time frame. Like, you guys are probably saying like, oh, this kind of seems a little simple. What you mean any time frame? There got to be more to it. Nope. It's pretty simple. This is all that she wrote, okay? So this would identify right here, or wherever we close it, if it was a candlestick of us breaking structure towards the upside. Same thing with the downside. I'll go over it one more time. So boom, if we have, all right, say we have an uptrend. Can I move? All right, say we have a uptrend. We're consisting of higher highs, higher lows in the market. If we want to see a downtrend, we would need a break of structure to take out that previous low. Boom, bam. Took out that previous low. Break of structure, because we broke towards that side of the market. We broke this previous low. And then boom, mark that out. Mark that bad boy out. BOS. That's our break of structure. And sometimes you'll see me marking out this line with Alt J. Boom, boom, BOS, boom. Now you know it. Now you're a profitable trader. You got it. Now I'm playing. But that is pretty simple. It's all she wrote, really. Okay, boom. You guys are probably like, MT, what happened to the other one? Consolidation. Yeah, I'm getting to it. Calm down. Hold your horses. Buckle down. Put your buckle seat on, or your seatbelt, or whatever. All right, but we got consolidation. So in consolidation, it'll kind of be like, boom, boom, boom. It's be a lot of chop. All right, so we call this consolidation, accumulation. What else? Just choppiness in the market. But you're probably wondering, like, how do I identify a break of structure within this? Okay, I'm going to tell you. So we're going to have a lot of break of structures already in here. Like, they're going to be a lot moving up, down, up, down, up, down. And that's to take out liquidity from the market. Okay, so how do I identify a break of structure within this consolidation, you ask? So we kind of mark it like this. And do not call me no support and resistance trader. I will crash out. But kind of mark like top and below. And we're looking for now a breakout from this structure. So if it were to go maybe, say, tap down here and went higher and broke this high, that would be a break of structure out of this structure. And that's pretty obvious. I feel like a lot of you guys already know that. So I'm not going to get too much in there. But also towards the downside, say we break this low, have a close below it, we're going to continue lower. Kind of like that. All right, so that's how we break out. And I'm not going to get too deep into this because it could be like, you know, we might have manipulation move higher. But that's AMD, and I'll get into that in another video. But just know that we can see breakouts just like this. Like, boom, close below, and come lower. Like that. All right, but now you guys know consolidation, break of structure on a bullish time frame, break of structure on a bearish time frame. So now that we've seen all the lines and all the art and all of that, let's get into the charts. Oh, that look you rhyme. Y'all see the lines and the art? Now let's get into the chart. Already bet. Chill, I know I'm cringy, but I'm just doing me. Chill. Nah, alright. Okay, but let's identify candlesticks actually like in the chart. Okay? So I got a replay. I got the replay feature, I forgot. Let's do it. Alright, so we're going to identify, I see a break structure right here. And I'll cut it off like right there. Alright, boom. Lock in. Alright, so we see that we are in a downtrend, right? We're in a downtrend. We got multiple lower high, lower low, lower high, lower low, lower high, lower low, lower high. Y'all get it. We're in a downtrend, okay? So what identifies a break of structure? Remember, we have all our lower high, lower low, lower high, lower lows. As soon as we break that last lower high, we close above it, then we will continue higher. All right. So where can we identify that? Where can we see it? Now I wouldn't say this. So like here, I'm going to even go back further. Now we're looking for a break of structure. Say we're in the live markets right now, looking for a break of structure. We're not looking hindsight because you're probably not going to learn that much hindsight. But actually, if this was a real chart, let's see how we would be looking at it. Okay, so boom, click. This, I would not call this a break of structure yet. Yes, we do have a green candle, but we want to see a high. What is a high? It's a 2 candlestick pattern, right? So we want to see boom, boom, this case, it would be, in this case for me, it would be a green candle, make a high, and then a black candle. All right. And we want, remember, we want to close above that previous high. All right. So this, let's mark out our lower high and lower lows of the candle. So boom, we have a lower low. And then this would be a lower high right there before this lower high and lower low. These are all our lower high, lower low, lower high, lower low. I want to delete this because I don't want to make it confusing. Okay, boom. Boom. This is a break of structure? Y'all tell me. No, it's not a damn break of structure, bro. It's not a damn break of structure. Did it close above the previous highs? Did it close above the, is that above the line? No, it's not above the line. So it's not a break of structure. Just wait. Oh. Hold up. Hold up. Did we cut? Alright, so this would be a break of structure. Since we closed above this previous high, we now consider this a break of structure, okay? And now we can expect higher highs, higher lows, and higher lows. We're not looking for just a wick above it. We're not looking for it to close right below it. We're looking for it to close right, or not right above, but have a candlestick close above the line. I don't gotta explain it like 10,000 times. Just get the concept. All right. So and then boom. Now we can expect to create some higher highs and higher lows, just like that. That's exactly how it's going to play out. Let's find another one. And that's why I said it's like, it's not like you guys are doing it wrong. I'm showing you guys what isn't a break of structure, right? So here we had a green candle. Is this a break of structure? Oh, we have a green candle. We just had a bunch of black candles and we had a green candle. Why isn't it a break of structure? Because we didn't close above those previous highs. All right. So, all right. Next, is this a break of structure? No, it's not. We didn't close above this high. Boom. This is real close. I mean, it's practically there. Is this a break of structure? No. What about this? If we wicked above it? No, that's not break of structure. This is where you guys are getting messed up. And yeah, if you entered here, it would go like this. This is how your trade would go. Oh, enter. I think it's a break of structure. Like that. All right. So no. We wait till right here. It's break of structure. Go ahead, enter, do whatever you want. You're profitable. Boom. All right. Psych, but that's how it works. Okay, went back into structure. We had to fill some imbalances. Okay, so what? That's how you identify it. All right, same thing with the downtrend. All right, boom. All right, so right now, here's the opposite side of the market. We have a bullish structure right here. Am I right? It's bullish. Correct me if I'm wrong. Okay, we have some higher highs, higher lows. Okay, here. Higher high, higher low, higher high, lower low, or higher low. And then we have, what is that? A lower high. So now we can expect a break of structure. Still creating lower highs. That's a good sign that we're going to be changing our structure. Now we have this. This candlestick is called a doji. Doji candle can kind of signify that we're about to change structure in the market. So let's see how it plays out. Oh, another doji play. Boom. Got one right here. So would you call this a break of structure? No. If you did, you're dumb. I don't know. It's like we're not dumb. We're learning. I got to remember that. But boom. We're looking for us to clear this low, right? For it to be a break of structure, because we want, remember, we'll explain again. Higher high, higher high, higher high, higher high, higher high. We want to take out that previous low, and this would be our break of structure right there. Break of structure. BOS. Beautiful drawing, right? Okay, but let's keep playing it out. I know I'm moving slow. Bear with me. All right. So is this a break of structure? Be so dead honest with me. Is this a break of structure? No, it's not. I'm not even gonna wait for an answer. I just know. No, it's not. All right. I think you guys are smart, but no, it's not. All right, but this would be our breakup structure. Yeah, I know it's far, but this would be one of the type you gotta kind of have to like use experience with this. See that we have some dojis here. All right, boom. Now that we have bullish structure down, or bullish breakup structure and bearish breakup structure, let's see that consolidation thing that we were looking at, right? So let's find a point of consolidation, or I just like using the word accumulation in the market, because when I think of consolidation, I think of supply and demand traders, and we are not that. Okay. This is AMD right here. We'll get into that another time, but right here. All right, so when we're looking for consolidation to find our structure in the market, we want to use this tool I use. 2 boxes down, called the Gann Box. Boom, boom. Here, follow my, you guys can pause the video, rewind it if you want to hear my settings I use. Yep, boom, boom. All right, so how do I use this tool? I mark from the start of our accumulation, the top left to the bottom right. Boom. I want the top of my Gann box to be at the relative highs and relative lows. Top and bottom to be relative highs and relative lows. All right. How do I identify a candlestick or a breakout from this consolidation? We want to see a full candlestick close from this consolidation. Ideally, if I'm on a 5-minute, I'm looking for a 5-minute candlestick close, 15-minute candlestick close. You get the point. All right. So that doesn't mean I'm entering off a wick. That doesn't mean if it's a huge wick, oh, it's a big wick, I'm going to enter off of it. No, no, no. You want to wait till it's a 5-minute candlestick closed out of structure. In this case scenario, since we're on the 15-minute time frame, it's a 15-minute candlestick close out of that. Whatever, it just needs to be a candlestick close out of that structure to then say we're going to the downside and we broke structure. All right. How would that look? Or let me bring out the path. Yeah, so boom, 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 we got accumulation, all that. All right, then we go break structure. Like, this is some easy stuff. Like, this is the basics. I also have this in my Discord explained as well if you want to check that out for free. But that's as simple as it gets. That's all I have really to explain. If you didn't understand something, hopefully you can watch it back. If you do have any questions, I'll be glad to answer them. I answer every comment. I'll see y'all in the next one, though. What am I going over next? More confluences. So probably order blocks, fair value gaps. Maybe. We'll see. Most likely. But yeah, I'm going to have fun during that. But yeah, I'll see y'all.